Crawford, and this is my session 5 video for my simple portfolio analysis dashboard. Starting off, I want to talk about how I selected these stocks because it took me a good minute to figure out what I wanted. I think at first I had mostly tech stocks, NVIDIA, Microsoft, a couple others in a 4-stock portfolio, and it gave me a lot of just weak numbers and weak uh, beta and Sharpe ratios, and frankly, just too high volatilities. And after doing research and learning that tech is a very volatile market, and especially in short, like 1 year time frames, and since that's the time frame for this analysis, I decided to branch it out and pick a couple different ones. And after doing some research through Claude AI, I found Coke, Kimberly and Clark, AT&T, Johnson and Johnson, and Microsoft to be my 5 different stock mixes. I chose Coke and Kimberly and Clark because they were low volatility stocks, whereas I chose AT&T because it was dividend paying. Johnson Johnson was something I mixed in after a couple different tries because it was a good mix of volatility and um, solid return. Good dividend paying. And then Microsoft was just the tech stock I decided to throw in to make things a little bit different and see if I can get some high returns. But these 4 are mostly my safety stocks. Even though I should have gave Microsoft a little bit less weight and probably these a little more, I decided to give it equal weighting. Go to my, and this is, getting basically into the code. We have our imports, Y Finance, Pandas, Numpy, MATLAB, Seaborn, Datetime, and warnings. And I have, I believe, 7 modules for this. So there's the configuration, which basically sets it up as all my stocks and their weights and everything. Basically, looked online and got 0.04 for the current 1 year rate for the T-bill to use my risk-free rate. Then going on to my second, the data module, which is basically just gets the data for all the tickers all at once, handles different data structures, and sets them all into a column basically to do all the data analysis and get the metrics for each. There's a quick cleaning of them that does that separately, and a quick exception if it because I had a lot of errors getting the data in the first place, which was a huge problem. So it's a fallback to download them each individually and run through that. And then we have it aligning data with our portfolio returns and benchmarks returns. I think this was actually a huge problem that was giving me a lot of errors. I think it had 250 trading days and it shortened it down to 248 when it didn't account for holidays and stuff. And that was giving me a lot of things. So dates weren't properly aligned, and that changed my numbers a lot. So I added that halfway through. Creates an aligned data frame between the portfolio and the benchmark and make sure that that's all lined up for any data gaps. And it tells me in the console at the end that if there were any missing dates or anything checked, that was wrong. And then we get to our calculation modules, which gets into a lot of our risk metrics and performance metrics. So here we have our basic returns, portfolio returns, which does that based on the stock weights, which is all equally weighted. And that's just simple formulas right there, or callback to functions. Then we have our metrics, our basic metrics like annual return, volatility, and Sharpe ratio, which is just a simple formula of the annual minus the risk-free rate, which I have is 0.04 divided by the volatility. Max drawdown, which I said in my prompts that I was a pretty conservative investor. I don't want to max drawdown more than usually 8% if I'm that conservative. I just think as myself with that, and I might put myself in that position for most people because I feel like most people are generally conservative. They don't know enough about stocks. Then we get to our alpha and beta. I'll talk about this later. Alpha was fine, but beta was giving me a lot of problems in this. So I changed a lot of things around, and it put them together. I don't really know why, but it's probably the most in-depth calculation in functions. So it gave me a lot of problems. It gets the excess returns from our portfolio and benchmarks, gets our beta, calculates the alpha and beta via their formula. So there's a lot of covariance. I'll get to that in our output here in a second, but our information ratio is also something that I added in. And let me just go over beta. Beta is basically how much our systematic risk of like how much that stock is going to move, or it's kind of like its volatility based on the actual market. So if the market moves, it's going to move, if it's over 1, it's going to move more than the market. If it's less than 1, it's going to move less. I'll get into it later, but my beta was incredibly low, and that was the only thing that fell out of my reasonable ranges. So I decided to go back and that's why I took all these changes. Let me real quick go over annual return. Obviously, how much I'm making on that stock per year. Volatility is how much that standard deviation changes of the stock. Basically, how much the prices could change in a given amount of time, which means it could drop, and that's where our risk factor comes in. Sharpe ratio, obviously, how much we're actually making depends on how risky it is. You know, if we have a lot of return and it's like highly risky, it makes sense. We're having like a one Sharpe ratio or less, where we could lose one. Whereas we have a really high Sharpe ratio from like low risk and high return. That's like a great thing that we want to look down. And drawdown depends basically on how risk adverse you are. So I said we're conservative, so we're probably pretty risk adverse. And I said we have like a 10% max drawdown. So like if we spend $100,000, our max drawdown would be, and if we would sell everything after $10,000, our max drawdown would be 10%. So I said 8% for that. Is that recording? Yes. And yeah, that's most of my metrics. There's also information radio, which is just our excess info from our align and benchmark, and a quick debug output that prints in the console all our metrics, basically return the functions, and then if there's ever an error, returns insufficient. So that'll be out there. And also the correlation matrix, which proved to be very important for my reasoning of picking these stocks and my interpretation of them later. Next, we have our visualization model, which gives me a lot of graphs, gives me all our metrics, explanations, and really guides me through how I'm gonna explain and interpret these stocks and the portfolio in general. So we have our cumulative returns, portfolio composition, our risk return scatter, and our correlation heat maps are 4 graphs. So that'll be a line graph. We'll basically show it over the course of a year and whatnot. Our portfolio, and it plots an axis based on our portfolio data and maps it over a year, and it's the color blue. And then it's also the benchmark is the other one, the one in the red. So you'll see that very simple later on, and it sets the title. This is all just graph when it says axis, yada yada, or runs a function here. Our scatter for each individual stock, our composition, which is just a pie chart split into 5 because it's 20%. Our correlation heat map is big, very big in finance, and it'll show, basically I'll explain why each stock has its correlation, and print our metric summary, which gives a lot of detail on our individual stocks and metrics and what they each mean, and like tell me that. Then we have our validation. I added this on last because obviously the beta was giving me a lot of problems, and I could not troubleshoot what it was, if it was miscalculation or just maybe some crazy correlation or whatever, but it seemed like too good of a portfolio to be true. So I just added this validation thing in, and it'll tell me, it says in the end that this metric is wrong, or this one is outside the reasonable range. I gave it a set of reasonable range that I calculated from a prompt in Claude AI, and it'll tell you. I could not problem solve the beta, but everything else is well within its metrics. Then we have special validation checks, portfolio return, alpha, information ratio, stock validation, stock beta, stock return, data quality, portfolio benchmark correlation, diversification. Gives me a lot of just summary and details on what's going on. That's very in depth, but I'll go over that when we actually run the code. Then we have our interpretation module, minute and a half, that gives me a lot of info of what I should do based on these stocks. It's a lot of this preset because I gave it a lot of preset stocks. I could rewrite it to add a lot of different options based on what the stock performance actually is and stuff. That would just take a couple minutes, but I decided to keep this simple because I handcrafted a portfolio that I thought was good and worked well based on the research that I did. And I'll go over that when I run the actual code. Then we have a risk assessment, overall performance assessment, a risk-adjusted performance, alpha and beta analysis, which was very important, individual stock analysis, best and worst performers, risk analysis and individual stocks, and investment recommendation. And this is all the preset stuff, kind of like I said it because I was conservative. You could set it so you're, more aggressive and more risk-loving. It also gives me a bull and bear markets indicators and our key metrics. Then our main execution basically calls back all the functions and runs through everything very smoothly. And that is the code.